A watchdog group called out House Speaker Nancy Pelosi for a very profitable Tesla stock deal shortly before the Biden administration released plans to make the federal automobile fleet electric. Last month, Paul Pelosi, a wealthy venture capitalist and husband of the California Democrat, bought up to $1 million of Tesla stock when the price was roughly $640.34 a share. The price had shot up to $838 a share by Thursday on the Nasdaq exchange. Tesla stock has been a darling of Wall Street for years, and the company stands to reap huge profits if the federal government moves to an all-electric fleet. The federal government has more than 645,000 cars in the fleet. According to John Pudner, the executive director of Takeback, a conservative political reform organization focused on pay-to-play corruption. He said, "It's corrupt and unacceptable for members of Congress, particularly the Speaker, to trade stocks in companies affected by their votes in Congress." Mr. Pudner also said Thursday, "Elected leaders from all political parties should live up to a standard of ethics that ordinary Americans see as vital to the country." A recent financial disclosure report by Nancy Pelosi showed the couple had made 25 stock market maneuvers, known as call options, which will allow Mrs. Pelosi to buy Tesla shared at $500 a share up to March 2022. The amount of the investment was as much as $1 million. The timing of the moves proved fortuitous. A Pelosi spokesman said her husband, not the Speaker, made the Tesla bets and the Speaker's political relationships were irrelevant. Grumbling about politicians profiting on insider information has dogged figures in both parties over the years. In 2020, several Republican and Democratic senators were accused of reaping stock market gains after early briefings for Congress on the upcoming shock Corona would deliver to the nation's economy. While the Senate's Ethics Committee cleared its members of wrongdoing in the trades, the allegations haunted former Georgia Republican Senators David Perdue and Kelly Loeffler, who both lost runoff elections earlier this month, tipping the balance of power in the Senate to Democrats. The Justice Department ultimately closed the investigation against all the senators without charges. The perception of elected officials enriching themselves on information they obtain that is not always available to average investors is enough to warrant barring them from playing the stock market. Donna Nagy, a law professor at Indiana University Law Professor, wrote in a recent op-ed for Bloomberg Law. "We know that mere disclosure of securities trades is not enough. The need for a stricter rule is abundantly clear. In 2012, Congress passed the Stop Trading on Congressional Knowledge Act, but some critics feel that measure is insufficient. A complete ban would be better, if only to save Congress members embarrassment," said James Trusty, a former federal prosecutor who currently works inside trading cases at IFRA Law. Mr. Trusty said, "Even if the actual charges are not provable beyond a reasonable doubt or trigger SEC action, the timing of trades with potential insider information always looks bad. The best route for eliminating the problem would be to have true blind trusts imposed while people serve in Congress. Not peek-a-boo stories or anything murky, just a blanket rule while you're in office so there's not even a temptation to cash in on access to information." Last month, Massachusetts Democratic Senator Elizabeth Warren reintroduced anti-corruption legislation that would ban stock trading by Congress members. According to a statement from Ms. Warren and a co-sponsor in the House, the Anti-Corruption and Public Integrity Act is more urgent than ever. Nancy Pelosi's spokesman rebuffed questions about the Speaker's stand on Warren's bill or the move to an all-electric fleet, saying it was not relevant.